Good afternoon. This is Tom Aspray with the Viper Report. It's Monday, October 12th, about 2 p.m. Eastern. We got actually about 90 minutes left of trading. It's another great day. You can see the S&P is up 2%. NASDAQ Composite up over 3%. And it's been on a tear since we opened higher, another gap higher open. So many of you may not even remember September, but let's take a look backwards briefly to see what happened in September and how it set the stage for today's rally. If you want to see what I've been saying since the start of the month, we can go back to this post. Always keep your eye on the risk. That was actually posted on September 1st. As it turns out, the market was making its high, and I was looking at the signs that the market was very risky up there and that a pullback was expected. Subsequent to that, there was also signs on a seasonal basis that we should head down in September. But as we got in towards just 2 weeks ago, I was starting to say, don't let the September blues get you down, because I thought we'd set up a really good buying opportunity maybe by the end of September or in October. The evidence started to emerge on September 25th. This is a chart of the QQQs on a weekly basis. You can see we had the high here. We declined for 4 weeks. And with the close on the 25th, we got down towards the 20-week EMA. More importantly, the AD line hit its moving average and turned up. That was a very good sign, suggesting that we should be looking for a bottom, not planning on another push to the downside, even though many on Wall Street were quite negative. In the Forbes post from that weekend, I wondered whether the economic data would turn stocks higher, and I ran through some of the daily studies. You can see here's a daily chart of the QQQs showing that its daily AD line had moved back above its moving average after it held well above retracement support. In last weekend's post on Forbes.com, I stress how important it is that you have to look at the market data, not the news, because the news has shaken up many traders since the debate at the end of September. Let's take a look at how the AD line analysis gradually turned positive, and by October 2nd, you should have been buying. So this is a chart of the SPY. We have the S&P AD line here. It was in a downtrend in a corrective mode for a good part of the month, but we started to see a change here. As of the last day of September, it moved above its moving average and was just coming above its downtrend, this green line here. The stocks only AD line had diverged as the market was making its peak. That was a confirmation of a correction. It was still lagging at that point in time, but it was trying to turn higher. You can see 1 day later, as of the close of October 1st, the NYSE stocks only had moved back above its moving average, and the S&P AD line had gotten even stronger. Of course, after the market closed, we got horrible news of President Trump's infection. Overnight, the futures were sharply lower, really getting hit. I had a bunch of buy orders in QQQ, SPY, XLK, pretty much a smorgasbord of positions. But when I looked at the market going into Friday's opening, I said, keep those orders in. We're going to be sharply lower in the opening. That's a great entry price. And I stuck with it, and they've been working out well. After Monday, October 5th, that was just a week ago, the action got even stronger. You can see the AD line here on the S&P made a new high. That was a sign that the SPY would also made a new high. We haven't got there yet, but we're getting closer. A couple more days like today and we'll be there. You can see the stocks only also improved sharply, confirming that it had bottomed out as well. Of course, the market got another shock on Tuesday, October 6th, as Trump canceled negotiations on the stimulus package. You can see the market was sharply lower. That day, the SPY was down 1.42%. But as I noted at the time, that didn't change the positive outlook and was another buying opportunity. as the market was down sharply Tuesday afternoon, but look what happened next. Now this chart is updated through the close of October 7th. You can see it closed higher, up 1.74% in Wednesday's session. That was Wednesday, October 7th. Look at the AD lines. They're screaming higher, confirming a new uptrend. This final chart shows today's action as the SPY is now trading at 253.97, up dramatically from the gap lower opening at the start of the month. This is the front page from today's report. So does this bullish action say you should be jumping in with both feet? Not in my opinion. We have some great gains already, but as you can see, the IWM is already 5.7% above its 20-day EMA, and with this action, the Qs and the SPY were 3%. They're like probably 5 or 6% above their 20-day moving averages. So as I told my subscribers, there are some warnings here. You can see this is the NYSE oscillator. It's reached a level where it often means a pullback. So that's what I think is likely. The prices will consolidate. No signs that the rally is over, and I think it can go significantly higher, but you want to be sure and very careful of where you enter the market. As you can see from our table, we have a number of positions. One of our best is the ARC Genomic Revolution ETF. We got in at 60.84 about 8 days ago. It's up 21%. That's highly unusual. And the precious metals finally came to life last week, so I like those. We're in XLK, XLV, XLY. So we have quite a bit of exposure because I thought that technology was going to start to outperform, and that has been the case today. Growth versus value was discussed in the latest post on Forbes.com. It's very extended. That means when it's rising, growth is outperforming value by a wide margin. No real clear signs of a top yet, but one is likely in the next year or so. You can see when value leads, which it did from 2000 to 2008, it's time to be in a different type of stocks. Well, that's pretty much all I have for today. If you are participating in the market, that's great. I hope you are. I laid it out pretty clearly in the past month. If you want to review what I sent out to you previously, you can go to the Viper Report YouTube page. You can see all the videos there and come to your own conclusion. If you'd like to learn more about my methodology, hope you'll tune in to Wealth 365 this coming Friday at 9 a.m. There's a link to sign up in the email, and those who sign up through me will get a second Doji course in the middle of the month. If you'd like to get some specific advice on either ETFs or stocks, just go to theviperreport.com and sign up. It's through PayPal, and you can cancel at any time, but I think you'll find it's well worth $34.95. Hope you have a great week. Thanks.